Fed Chair Jerome Powell warns Trump's tariffs could trigger inflation and economic slowdown. Federal Reserve Chair Jerome Powell issued a stark warning about the economic risks posed by President Donald Trump's aggressive tariff policies. Speaking at the Economic Club of Chicago, Powell highlighted unprecedented challenges for the Fed as tariffs threaten to raise inflation while slowing growth and increasing unemployment, creating a complex policy dilemma unseen in decades. Powell described Trump's tariff increases as fundamental policy modifications without recent precedent, placing the Federal Reserve in uncharted territory as it navigates their economic impact. The scale of tariff hikes, including a 145% tariff on Chinese imports and 25% tariffs on steel, aluminum, vehicles, and goods from Mexico and Canada, has exceeded expectations, intensifying uncertainty for businesses and markets. Powell warned the U.S. could face stagflation, a simultaneous rise in inflation and unemployment coupled with slower economic growth, a scenario last seen in the 1970s and 1980s, complicating the Fed's dual mandate to promote maximum employment and price stability. Tariffs are highly likely to cause at least a temporary increase in inflation, with consumers shouldering part of the cost through higher prices. Though the duration and magnitude of inflationary effects remain uncertain, Powell indicated that tariffs could slow economic growth and increase unemployment, forcing the Fed to balance conflicting objectives without a clear historical playbook. Following Powell's remarks, U.S. stock markets dropped sharply, with the Dow Jones falling 700 points and the S&P 500 and NASDAQ also experiencing significant declines, reflecting investor concerns over tariff-related economic risks. The Federal Reserve plans to maintain steady interest rates for now, awaiting clearer data on how tariffs affect the economy before adjusting monetary policy. President Trump publicly criticized Powell for not lowering interest rates sooner, blaming the Fed chair for economic difficulties despite tariffs being a major driver of inflationary pressures. Analysts project that tariffs could reduce long-term GDP by around 6%, lower wages by 5%, and impose substantial costs on middle-income households, with tariffs raising federal revenues, but at the expense of economic growth and consumer prices. Jerome Powell's candid assessment underscores the complex challenges the Federal Reserve faces amid President Trump's aggressive trade policies, highlighting the delicate balance between controlling inflation and sustaining economic growth in a volatile global environment.